Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock. Let's go over the market on yet another painful day in the market. Though with that being said, I think Tesla actually held up relatively well. But again, regardless, we'll go over everything, give you my thoughts moving forward and all that good stuff. So ladies and gentlemen, as per usual, if you enjoyed, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, if you do enjoy my technical analysis, thoughts on the charts, etc., well, I do share my thoughts with my members every single day the market is open. The link to that is in the description below. For just $3 a month, you get access to all my thoughts, post updates, mainly on Tesla stocks, sometimes other stocks as well. So definitely check it out. Or for $5 a month, you get access to everything I just mentioned in the first tier. So, Tesla plus other stocks as well. What's it called? Plus NVIDIA daily updates as well, if you're interested for the $5 tier. I might be opening up one more after that with other bonuses, but I'm still considering how to do that. But regardless, jumping into a Tesla, unfortunately, with another painful day in the market, closing down 3% at $282 per share. But the good news is, at this point, we're trying to find any good news we can, is the fact that, we're actually holding up honestly relatively well compared to the market. I mean, QQQ being down 2.8%, pretty much the same percentage as Tesla, is pretty good, right? That normally if Tesla was quote unquote following the market, it would be down closer to 6% today on the day, right? Which is not bad. I mean, and even something like Google and Amazon are only down 2.5%. So all things considered, Tesla is actually kind of slowing down the bleeding relative to the market, which is at least something as of right now. But again, the overall picture stands, right? Like I mentioned yesterday, I still expect to find a bottom around this area. And I mentioned the range, right? Again, it wasn't just because I said it yesterday, we have to just bounce today. It's not how these things work, especially now when the market is essentially puking itself like this, right? It takes time. It takes time. It'll take sometimes a day. Sometimes it'll take a week. Maybe it'll even take 2 weeks, right? But the point is that it will take some time. However, the thesis remains, and I'm going to reiterate everything. And I even added one new indicator down here you can see, which is a pretty nice indicator. I keep forgetting the name of it. I always forget the name of it, but essentially I'll explain about it once we get into it. But the thesis remains, right? We're at the bottom of the channel. We're completely and utterly hugging the bottom of the Bollinger Bands. RSI is oversold. I'll go over this indicator very soon. And we're I don't want to use the word we're at. That implies that that's it. It's time to bottom. We're pretty much around or in the zone, I should say, of large weekly and even monthly demand. So I'll go over that as well. But just going over very quickly on the daily chart, again, we're severely hugging the bottom end of the Bollinger Bands, right? If I bring out these other bands here, we're actually hugging the red line of the bands. That to me usually signals some very extreme very extreme selling pressure, obviously, but also some very high levels of fear and very high levels of being oversold on a stock, right? Again, Tesla stock, I know there's a lot of memes about it. A lot of people think the stock is worth zero, etc. I get it. But at the end of the day, if this stock was worth zero, it wouldn't be where it's at even at today, right? So my point, and the reason I bring that up is because whenever a FANG or like a Max 7 stock, Tesla, NVIDIA, Google, whatever, are hugging the bottom line, even the Google's doing it right now, it's actually past that red line. These are extreme cases and they're usually very scary, right? But they're extreme. They're extreme oversold and extreme overreactions. And again, stocks don't just go up, but they especially don't just go down, especially not if they're the Mag 7. And the point I'm just trying to make is the fact that I like to usually trade reversion strategies, mean reversion, right? Remember how, and this is what I used. Remember when I was up here, I just want to, reiterate a point. When we were up here in this area up here, remember when we were trading up in the 400s, like 420s, whatever, right? And a lot of people were very bullish. I still remember this time, right? Everyone, okay, I shouldn't say everyone, but a lot of people were very bullish around here. A lot of people were saying how, we're just going to consolidate a tiny bit here and then break out and go up to 600. It was all over the place. Everyone was saying that, but I wasn't. Why? Because again, I like to trade mean reversion. Why was I one of the few, at least from what I see, not just overwhelmingly bullish thinking that 600 is next? Well, number one, we were in this little downtrend, technically speaking, so that would have to have broken out. That's number one. But number two is the fact that we were very far away from the mean reversion. Now we're pretty much just a few short weeks at the opposite end of the spectrum almost, right? We're at the opposite end of the spectrum. So back here when we were very far away from the mean reversion, which is all the way down here, everyone was bullish. But the thing that's interesting to me is the fact that now we're in the arguably opposite end of the spectrum. We're all the way down here. So let's just use an example, right? When we were trading around this general range, let's just use, I mean, up here was, in my opinion, extremes. So like, let's just say like the price that we traded at pretty often, which was, we'll say about 425, right? We were around 425, 420. We were around that area for quite some time, and that's when everyone was bullish. What percentage away were we from the mean reversion? About 17%. Let's take a look at this, right? How far are we away from the mean reversion down here? I mean, granted, it's a little bit different going up than down, but nonetheless here, we're about 27% away from the mean reversion to the bottom side. Like, let's use another very extreme example down here, for instance. This is how far were we at the bottom over here, right? Away from the quote unquote mean reversion. About just over 30%. So the point I'm just trying to make is this, and it's a very simple point. I know there's a lot of fear in the market. A lot of people are scared. A lot of people are exiting positions. They're taking losses. They're scared the market's going to crash. And maybe this is that time the market crashes. That, again, no one can predict that. If the market crashes, it is what it is at the end of the day, right? Just make sure you're not in some degenerate place, which is something I've been telling my members about for the last like 3 weeks or something like that. I'm like, guys, please don't be in short-term calls. It's not financial advice, but man, like, the only people that are truly panicking here and truly taking like very big L's, or even better yet, really getting margin called and or blowing up their account, are people in degenerate short-term option type plays. The only thing I play, like I said, is shares. I mean, I sell options, but sold options, like for instance, sold puts, they just get turned into shares, worst case scenario, right? And at the end of the day, you technically speaking have infinite time ultimately, right? Just technically speaking, compared to options, which you are on a time limit, right? You ultimately are on a time limit. Like, this thing better start moving in your direction sooner than later, especially if it's relatively short term, or there's no coming back. There's no waiting it out, right? So I always like to reiterate these kind of risk management type situations, I guess. But again, going back to the weekly very quickly, the reason I bring this up is because everyone always gets scared near the bottoms and everyone always gets bullish near the tops, right? And again, we're getting to like some pretty extreme levels, but the best part is that despite us being at extreme levels, which is where I want to start bringing up this indicator, because again, I like to trade mean reversion strats. I mean, I'm actually pretty sure we're even near the bottom end of the Bollinger Band on the week. Let me take a quick look. That's the wrong one. Take a look at this one. Okay, the Bollinger Band is still a little bit lower, but I don't think we'll actually go down to it because I just view too much potential support coming in here. But before I jump into just the demand zone that I'll talk about on the weekly and the monthly, I do want to talk about this indicator. So this is on the weekly time frame. We'll go on the daily as well. But this indicator essentially just it's mean reversion. It's a mean reversion indicator. It also is the same concept I just mentioned, where how on the weekly chart, remember how I mentioned where the mean reversion, because again, stocks don't only go up and stocks don't only go down, right? They zigzag, right? Ultimately, if I zoom out here, just to reiterate this point once again, despite how aggressive Tesla moves to the upside and to the downside, what does it always end up doing at some point or another? This line in the center, it reverts back to the mean. It sells off aggressively, back to the mean. Rises up aggressively, back to the mean. Sells off aggressively, back to the mean. Sells off aggressively, back to the mean. Rises aggressively, back to the mean. Rises aggressively, back to the mean. And now we're arguably at the opposite end of the spectrum. And the point is the fact that they don't just go down and they don't just go up unless you're in small caps. It's the big caps, they just don't do that, right? They will always zigzag. I mean, now granted, the direction overall could obviously be down, which I don't even think that's the case here, which I'll go over very soon as well. But again, I'm a mean reversion type trader. I like trading mean reversion. I like when stocks are at extreme levels, right? I like when there's a lot of fear in the market, right? That's the kind of, territory or at least I try to really pounce on, essentially, is what I'm trying to say. It's risky. It is risky. But that's why I only do shares, right? This is why I don't do calls, because it is a bit of a risky strategy. Obviously, it does take some, you're going to need to be able to, take it in the nuts. It's essentially, a few times over. But again, it's much easier with shares compared to options. Again, I'm just illustrating the overall thesis behind what I'm about to explain, which is, again, mean reversion. And this is going into this indicator, which is the same concept. You can see this line in the very center sitting at pretty much zero, like right dead smack in the center. You can see here, right? I can honestly make it maybe even a little bit more obvious just in case it's not too obvious already. I'll make it white, actually, just to make it even more obvious looking. Boom, right in the center. It's a mean reversion type indicator, right? It just kind of further constitutes what I've just been mentioning with that one on the essentially the 20-day moving average. So what does this mean? Well, if I zoom out on the weekly, you can see we are right over here and sitting at about negative 27 roughly. Now, again, the thing with mean reversion in this case is you are technically catching a knife. But what can I say? I like juggling knives. But the reason I bring this up is because take a look at this, right? The only other instance where we broke well below these levels and went to some like pretty much historic levels of extreme. This is my guess. If I had to guess right now, this is probably when Elon was selling. Let's take a quick look. This is most likely, yeah, this is when Elon was selling and we went down to $100 per share. But the whole fast and aggressively, we snapped it back up in the other direction. So ignoring that, in my opinion, was a bit of a one-off, right? That was like an exception to the rule, not the rule. The rule, however, is going to be this, right? Where you can see, as I bring out my little, actually, I'll do it with this instead. Yeah, these lines over here are for the daily. I don't know why I chose it on the week. It's kind of annoying. But anyways, the point I'm trying to make is this, right? I can draw a line right across like this, right across like this. And what do you notice, right? Just tell me what you notice here, right? Again, I'm not trying to, this is just no emotions. I'm not trying to be emotional about it. I'm just giving you the facts. I'm just giving you what the numbers say, essentially, what the stats say, what the lines, the graphs, it's what they say. It's not what I think. It's not what I believe in. It's just what, it's what it shows and what it explains. And what does this one show? If you draw the line across like this, and every single time Tesla has come down to these extreme levels that we're pretty much at right now, this kind of -28 to -30-ish range, you can see here, each time it's shown a bottom, right? Look at this. Each and every single time, this is the one where Elon was selling. It's a bit of an exception, of course, but here we are once again. Each and every single time the weekly has gotten to these extreme levels, it has been some level of a bottom. Now, the thing with mean reversion you have to understand is also this, right? Just because this has technically came down to this level, this doesn't necessarily mean it has to just completely and utterly rally to all-time highs from here. What this means is the fact that we're too far on the opposite end of the spectrum, in this case on the downside of the spectrum, right? So for instance, we could take a look back at the previous instance where I hit this exact level. You can see, it took some time, right? And this is why I say this can take time. But the point is it came to these extreme levels, it stopped the bleeding, but it did go sideways for quite some time on the weekly before it finally found that level to the upside and essentially reverted back to the mean, right? That's just as a quick little example, right? Same over here, right? This one actually ended up having a massive rally, and then obviously before it was levels that was like where Tesla was still trading at very, very much different levels than it is now. But the point is the idea is the same, where very aggressive selling came down to these same levels that we are at right now, according to this line essentially, or this indicator, if you will, reverted back to the mean. This one will happen a bit faster, right? Sometimes it's faster. Sometimes it'll take a couple weeks, maybe a month. Sometimes it'll take a few months or a few weeks. Again, I don't know the timing, and I'm not going to pretend like I know the timing. I don't know how long it'll take. I don't know. But the point I'm just trying to make is the fact that we are at these extreme levels. Now, I'm kind of getting on a pretty big tangent over here, but I really wanted to kind of illustrate that point because it's very important. We are at that. But again, maybe that's not enough for you. Maybe you're thinking like, yeah, but what if this time is different, right? And it could be, absolutely. However, this is where we started looking at other essentially confluences, right? What else lines up around this kind of area that we are roughly at right now that further backs up the fact that this is just not the time to be scared. Like, this isn't the time where you panic. Like, you should be panicking up here from how much the stock has went up, not panicking down here when it's retesting essentially massive weekly demand zones or weekly support, in this case, zones. Why is this a weekly support zone? Simple. Massive resistance, massive resistance, massive resistance, massive resistance, massive resistance. We finally broke on slightly elevated volume. And what are we doing? Guys, what are we doing? We're coming back right into it and retesting it. We also have this trend line sitting right around here as well. Like, there's just so much confluence around this area that should, again, I'm not trying to say this is perfect. Nothing is guaranteed. It doesn't mean this absolutely will play out. But in terms of the risk versus reward, people that were bullish up here are now scared down here. Like, it blows my mind. Like, you should be scared up here. The stock has rallied so aggressively and people were still calling. Like, the stock rallied 70, 80% in like 2 months and people were still calling for another like 40% rally. That's when you get scared, man. This is where you get scared. This is where the terrifying stuff comes out. I still remember talking in this area saying I'm pretty much not even touching Tesla. I'm barely even trading it. Go back to those videos. I remember mentioning that. I was telling my members the same thing. This is where I was scared. I'm like, guys, this is scary. Like, this is not where I want to be longing the stock, right? This is just not that's just not the area to do it. But now that we're coming back into a substantial area of support, people are now panic selling. Like, you can't make this shit up. You really just can't. But okay, let's talk about more confluence. Like what else can line up here? So you can see that exact same area on the monthly time frame over here. We also on the monthly have essentially reverted back to the mean or damn close to it, which is good, right? That cools off the stock. Now, again, it might take time before we get an actual substantial rally, which really comes with the break of this descending channel top line right here, which is well above us right now. That will be a break of like 360, which, you know, it's a bit of a work, you know, to get there. But going back to the monthly here, right? Again, you can see, I'll remove the Fibonacci for now. You can see the exact same thing. You can even arguably send this down a little bit lower like this. But the point is the fact that it still has that same look to it. What is that look? Look at the monthly time frame. Look how much this area resisted us. Look how many issues we had getting above this area, how much supply was in this area, but we finally broke it. That's good news. And now we're coming back into it, guys. This is like this. If there's an area for Tesla to, at the very least, stop the bleeding. I'm not trying to say, okay, guys, we bought them here and we go to all-time highs. Hey, it's that simple. No, I'm not trying to say that. But at the very least, the bleeding substantially slows down or even stops. Like we're entering that zone. Now, I'm not saying it's literally right here, right now at 280. We could go into 270 still, but 270 to 290, maybe peeking our head slightly in the 260s. Like this is that zone. Like again, it's not my opinion. That's not just me hoping for something. It's just, it is what it is. Like, it's just what the chart shows, right? Maybe obviously it fails. And if we break down below these levels and start closing below 260, yeah, that would be pretty concerning. I'm not going to lie. Okay, things are getting a little bit more concerning here. That's not good. Like you don't want that to happen. But you don't assume something that is going to happen unless it happens in the market. Like you don't assume it's going to break below 260 and close below 260 and then flush even lower. You only assume, you only believe that if it actually happens. So you don't assume it's going to happen. It needs to happen. You know what I mean? So that's just kind of my overall, I guess, thing, if you will. I don't know, like thought process. Now, again, if that wasn't enough, let's take the Fibonacci's. The recent true like swing low that we had was down here, right? This is where we really bottomed out. This is where we really began that very aggressive rally, right? Let's take a Fibonacci's. And this Fibonacci actually works. Why does this Fibonacci work on Tesla? Because we made higher highs, right? This was the high to break. Despite the monthly, of course, having, you know, a lot of selling pressure up here, we still broke these highs. It doesn't matter. We still broke this high. We still went above these highs. We still went above this high. So we did ultimately, regardless of how you want to look at it, regardless of your opinion, we did set higher highs, which is why this Fibonacci is very effective. And now we're entering a very strong discounted range, which is that 618 Fibonacci sitting at about that 273-ish range. Like this is that zone. Like there's just so much confluence around this zone that you can't even make this shit up. Like you just can't. Like this is that area. Like if there's an area for Tesla to hold, this is it. Now, if it fails and we lose, let's say 260, okay, that's not good. That could be concerning. That will potentially cause some issues, and that, you know, that will be a problem moving forward, right? That will be a problem. I will admit for sure that is not ideal. Like for instance, on the weekly, you can see here, right? That'll be essentially losing this trend line right here. Like that would be a problem. I'm not gonna sugarcoat it, but we're not there. Like we're not there just yet. We could be, but we're not there. So as of right now, you know, based on the chart, I will technically assume, I guess you can say, but until proven otherwise, based on what the chart is showing, this to me shows like it's a massive area of support. So let's just see how it plays out, right? But again, that's kind of my overall thought process on this. Let's see how it ultimately folds out. The market is in a very finicky spot, of course, but I do believe QQQs, for instance, had a very massive demand here. It could technically drop a little bit lower, but we are entering a pretty nice level of demand here where we saw a very strong bounce before. Let's see if this repeats. We have PCE tomorrow. But yeah, I just want to bring that out, right? I just want to kind of share that. You can see QQQs also had very extreme levels of being essentially, you know, very much oversold, short term, of course, as well. There's a lot of fear and panic in the market. I mean, it is what it is. So let's see how this plays out. Let's see how this unfolds moving forward. Long video, but I really want to share this point across, right? I mean, again, this is just my perspective. I could be completely wrong. Maybe this thing just completely falls apart even further, and we just go, you know, like this. Maybe the stock literally just does this right here. Maybe that's it. Maybe it just does this, and we go back to $1 per share, and let's just restart the whole thing. Hey, maybe it's a possibility, but as of right now, I don't believe that that's the case at all. But yeah, let's see. Let's give it a few more days. But yeah, thanks for watching. See you tomorrow. Peace.